guys, welcome to Talking Money with Nozi, personal finance made simple. It's been such a long time, right guys? I am back. So today I'm going to be investing for my daughter. I'm maxing out her tax-free savings account, which is the TFSA. So today is the 26th of February. We've got 2 more days, of course, until the end of the financial year. So remember, each and every financial year, which starts from the 1st of March up to the last day of February, that's our financial year. So if you are investing in a tax-free savings account or a TFSA, you have that time to invest the full amount of 36,000 Rand. Now, sometimes people misunderstand. You are not forced to contribute the entire amount. This is just the maximum contribution allowed in a financial year. So if you have it, this is the perfect time, of course, to invest that money. If you don't, not all hope is lost. Just invest what you have before our new financial year starts again on the 1st of March 2025. Another common question that I get is, what if I've got 36,000 Rand that I want to invest now, end of February? Will I be allowed to invest the other 36,000 Rand in March, on the 1st of March? And the answer is yes. We would have gone into the new financial year, which is the 2026 financial year. So you will be allowed to deposit the money on the 1st of March. So back to my daughter's investments. I've already logged into her Easy Equities. So this is hers. It is not my account. And I like the new feature on Easy Equities that you can blur your portfolio. I think I need to do a video of how to navigate the new upgraded Easy Equities app and website. I know a lot of people have been complaining. Things are a little bit more complex now, but I think it's still fairly straightforward and simple to use. So I have 2 accounts for my daughter. She's got the Easy Equities ZAR as well as the tax-free savings account. So today we are going to be investing in her tax-free savings account, and I'm investing the full amount. So if I click in there, I've already transferred the full 36,000 Rand. This is just a little bit of interest that has accumulated because this money has been sitting. I have spent a long time without investing this money, so it's accumulating just a little bit of interest. Trust me guys, this is not the best way to use a tax-free savings account. I have had questions before where people say, what if I just put the money in as cash and leave it and let it earn interest? As you can see, this money has been sitting in here now for about a month or 2, and yeah, the interest is not anything to write home about. And also, I don't think it's the best way to use your tax-free savings account as an interest-bearing account. This is because the interest that you're going to earn is very little anyway, so you are much better off investing the money by buying ETFs or by buying unit trusts. So because I love ETFs, I will be buying ETFs. Now, on to what I'm going to invest in for my daughter. I just want her portfolio to be very simple. So today I'll be buying 2 ETFs. And if I go over to this page, which is ETFSA, this is my go-to page when I want to do research about ETFs, right? And so today I'm going to be buying Satrix ETFs. There's one ETF which was launched last year, which is the ETF, one of the ETFs I'm going to be buying. It's the Satrix MSCI ACW1 feeder fund. So what is that? So let's have a view of what that ETF is all about, and the reason why I'm buying it, because I immediately fell in love when I read this fact sheet. So it says that the Satrix MSCI ACW1 feeder ETF is an index tracking fund. It says the mandate of the ETF is to track as closely as possible the value of the MSCI ACW1 index in ZAR. So if I wanted to go further to do research, I'll just copy this, which is what you should do as well. If you're researching your ETFs and you want to know more about the index that you are investing in, you just copy and just search on Google. Okay, let's do that. It'll pop up several links on Google. I just want to read this one by Satrix. So it just tells you here that the Satrix MSCI ACW one ETF seeks to track the performance of the MSCI All Country World Index, which offers investors access to a broad range of companies from developed and emerging markets within a single fund. So that's one thing that I like. It's got the best of both worlds, right? We've got the developed markets as well as the developing markets in one ETF. So we are killing two birds with one stone. I nearly said two stones with one bird. So the index is composed of large and mid-cap stocks. What does that mean? So companies on the stock market are ranked according to size. Okay, so we've got very large companies, and then we've got medium-sized companies, and we've got small companies. So this ETF has got the large ones as well as the medium-sized companies, right? Across 23 developed, meaning 23 first world countries, and 24 emerging market countries. That's very good. With over 2,900 constituents, meaning over 2,900 shares. And it says the index covers approximately 85% of the global investable equity opportunity universe. So basically you are, if you buy this ETF, you are investing in 85% of the markets of the world. So that's very, very good exposure, right? And then of course you will see here, what else does it show us? Okay, then it shows us the performance. Well, there won't be any performance for 1 year, 3 years, 5 years, 7 years, because this was launched sometime last year in 2024. So that's why it will not have any historical data. If you wanted to see historical data, you would need to go to the actual feeder fund, right? And then let's see other information here. The TER, the total expense ratio, which is how much you'll be charged for investing in this ETF, is 0.35%. What does that mean in rand terms? It means for every 1,000 rand that you invest in this ETF, you'll be charged 3.50 rand in fees for investing in that ETF. So it's not too bad, right? Distribution, this fund does not distribute dividends. This is talking to dividends. This doesn't mean that the fund doesn't have dividends. Okay, so this is an example of a total return ETF. Total return means any dividends that this fund earns is not distributed to investors in cash. Rather, those distributions are reinvested automatically back into the fund. So I'm quite happy with that. I'm not too crazy about dividends. I love dividends, don't get me wrong. But even if a fund doesn't distribute to me, in this case to my daughter, I don't mind, right? My strategy is not to earn dividends at this stage, or rather for my daughter at this stage. So I'm fine with total return ETFs. Then you can also see the top 10 holdings, because of course, since this is an all-world ETF, it includes countries from around the world, and all countries are represented in terms of their stocks according to that particular country's market size. So it's not a surprise if you look at the top 10, the biggest country, rather the country with the biggest stock market in the world, is the US. So if you are investing in a global fund, okay, if you look at the weighting of the US will have a heavier presence in any of the global funds because of its size, because of the size of its market. So it's not a surprise that the top 10 holdings in this ETF are American companies, right? So like Apple, Nvidia, Microsoft, Amazon, Tesla, Meta, which is Facebook, etc., right? So these are all American companies, which goes on to another question that is popular that I get asked is, should I buy the S&P 500 if I've got like an MSCI World ETF? And the answer is you don't really need the S&P 500, because you'll see that the S&P 500 is represented within the global funds, right? So it's a little bit of a duplication, although not entirely, because the S&P 500 is purely American companies, right? It doesn't have companies from Europe and emerging markets, etc. But the representation is there if you buy a global fund. So I'm not going to say don't do it, but you must be aware when you're investing what you are doing. There will be some overlap. If you have a global fund, you will have some overlap if you then buy like a S&P 500 or like the NASDAQ 100. Okay, same story about in performance. This is a fund that was launched, where are we? It was launched last year. So there's not much information about the performance for the past 1 year, 3 year, 5 years. And then you will see here something that might interest you. The number of investors in the fund currently is 1,579 investors. The portfolio size is currently 477 million rand. That's understandable, right? Because this is a new fund. Okay. If we compare to a similar fund or a comparable fund, look at the Satrix MSCI World, which is very close to the one I'm showing you now. So the Satrix MSCI World is a world ETF, except this time around it only has the developed markets, so only developed market countries. It does not have emerging market countries, right? So you will see it has more investors, 57,478 investors, and the portfolio size is huge, 17.3 billion rand. This is obviously because it's a much older fund, right? It was launched in 2017, and so it just goes without saying that it will have more investors and have a much larger portfolio size. And of course, it's traded, the volume of trades is higher on a monthly basis than this newbie, right? Because it's very new. Okay, so this is the one fund I'm buying for my daughter, which is the Satrix MSCI ACW1 feeder, because it's an all-in-one fund. It's got developed markets and emerging markets in one. And then the second fund that I'm going to buy for her is familiar with you all. I'm going to be buying her the Satrix 40 ETF. It's a domestic ETF. It's a South African ETF, which is made up of the 40 largest companies in South Africa. If we take a view, you will see that the top 10 companies are South African companies. So Naspers is the biggest holding, followed by FirstRand, which is FNB, then Standard Bank, Capitec, Process, Goldfields, Anglo American, MTN, British American Tobacco, and as well as ABSA. And then you can see the performance of the fund over a year. Well, this is past performance, right? It is not an indicator of future performance. So 10% in the past year, in the past 3 years, 7.7, in the past 5, 11.9, and in the past 10 years, 8.81%. Where it says distribution, they pay dividends quarterly, so meaning she's going to receive dividends in January, then again in April. Yeah, I'm struggling with my months. And then in April, then in July, and then I think again sometime in September or October. So they pay dividends 4 times a year. Okay, and you can see also the portfolio size, meaning the total amount of investments within this fund is also huge, 14.6 billion rand, and the number of investors is also a lot, 122,000. Guys, it is a lot, but it's not a lot. We are in South Africa, how many are we? We are about 60 million. And by the way, the Satrix 40 is the most popular ETF in South Africa. And I'm quite shocked that the number of investors is only 122,000 people. It's very odd, right? So it means a very small segment of our population is investing. It also makes me quite sad, right? Yeah, this number makes me question a lot of things. I hope this number will only get bigger from here. I mean, I'm expecting at least 1 million investors in Satrix 40, but 122,000, that tells you something about maybe the lack of knowledge of investors, lack of, I don't know, but yeah, it's quite a low number for such a big country, right? We've got a lot of people, and 122 is extremely small. Okay, back to my daughter's account. Let's invest. So that's all I wanted to show you, my investment choices. Well, I don't have any holdings, so if I click on all holdings, there's nothing. So let me click on invest now, and let me see the code of that Satrix ETF. It's called Satrix MSCI, so STXACW. Let me see if I use that to search. STXACW. Let's see if it will come up. There we go. Okay, so I'll click there. Then it's going to tell me that, look, this instrument, which is this ETF, is available in multiple accounts. Okay, why is it not showing me my TFSA? Very, very weird. It's showing me the demo as well as the ZAR, not the TFSA. Very, very, very strange. Let me click here where it says TFSA. Hopefully. Okay, there we go. I've clicked on it. The current price is 85 Rand and 9 cents. I'll invest 20,000 into the all world ETF, and then the 16,000 will go into top 40. So again, let me answer another question which people commonly ask me is, should I invest the whole 36,000 at once, or should I trickle it in over the months? Okay, according to research, it's better to just go all in. If you've got a lump sum, it'll turn out better for you to just invest it at once, okay? But for psychological reasons, okay, because also remember, we are emotional creatures and we should work with ourselves. So don't work against yourself. If you know that you cannot stomach investing the full amount, whatever it is, your whole lump sum that you've put in here, rather trickle it in over a 3-month period or 6 months period. That's fine. Although the ideal would be to do it all at once. So because I'm really not nervous about the market, I've been there, done that. I have been investing for quite a while now, so I can stomach volatility and ups and downs. It doesn't bother me, okay? And also, this is not my account. It's my daughter's account. Of course, I do care what happens in her account, but yeah, I mean, she's young. She's a year old. She's got the rest of her life to stomach market ups and downs, so it shouldn't matter. Okay, so I'll choose the second option, only buy at ask, meaning this transaction will only go through if the price of the ETF is less than 85 Rand and 9 cents. If it's above that, the transaction won't go through. So place buy order for that. Okay, there we go. Then the rest of the money, then I'll use to buy the Satrix top 40. Nice and simple. Okay, so invest now, and then I will search for, let me go where it says filter by account. I'll click here where it says TFSA. Then I will search STX 40. Okay, so this is called the ticker symbol. So this shortened version of your ETF name or a stock name, it is called a ticker symbol. So there's top 40. Okay, there we go. It picks it up this time around. So I'll click on tax-free savings account, and the price is 81 Rand. And then I'll invest the entire amount. Okay, only buy at ask and place buy order. So let me see if that transaction has gone through. Let me check where it says pending buy orders. Okay, so all of my orders have been executed, meaning my investments have gone through. So here we go. So you'll see here I've bought the top 40, and here's the Satrix MSCI All World Index ETF. One thing that you'll notice, for those that are observant, one is red, one is green. What does that mean? That's another common question that I get. So red means loss. Okay, can you see here it says profit or loss? And green means profit. So it means that my top 40 investment just lost a value of 76 Rand and 71 cents, which is 0.48%. But my Satrix MSCI All World has actually gained 7 Rand or 0.04%. This is normal. So this is what makes beginner investors panic. They're like, okay, I put 16,000 Rand. Why am I now seeing 15,800 and whatever? What happened? These are what we call paper losses, because it's not a loss that I have realized. I would only realize the loss if I click on sell. So while I'm holding on to my investment, I haven't lost anything, and the market is going to recover by itself. So I'm not even panicked about this. Okay, so you shouldn't panic when you see the reds or the greens. Don't get too excited. That's just how the market is. You wake up one day, it's on a minus, the next day it's on a positive. That brings me to another thing. You do not have to check your investments every single day. It is not necessary. In fact, you will stress yourself out and you're more likely to make very silly decisions. You're either going to sell at the wrong time or you're going to buy at the wrong time. Okay, so most people, when they see red, they want to sell. That's the wrong time to sell. When they see green, that's when they want to buy. Okay, but since we are long-term investors, I'm assuming I'm talking to long-term investors, the ups and downs don't matter to us. The daily ups and downs or the weekly ups and downs or the monthly or even yearly ups and downs do not matter. So we invest, we close our app, and then we go on with our daily lives. We do not live inside our apps, guys. We walk away. So one thing I want to do with my daughter, I want the dividends from Satrix, because Satrix distributes 4 times a year. I want to set them to reinvest back, right? Instead of me logging in and doing it manually. So I'll click here where it says dividend preference. I'll click there and set that it should automatically reinvest the money into the holding. So whenever Satrix pays out a dividend, it's going to go back into the holding, right? Then I'll click save and it has saved the changes successfully. And then just for those that don't remember, let me just click on the TFSA again. I want to show you my holdings. Okay, so now that I've invested in there, let's go in there. All holdings. Okay, so another thing that you should know about a tax-free savings account, which makes it very attractive, is that remember, if you have local ETFs like the top 40, any South African ETF, any dividends that you earn from a South African ETF, those dividends will be tax-free. So whatever dividends my daughter will be earning from top 40, they will not be taxed. Okay? The Satrix MSCI does not distribute dividends to me, okay, directly. The dividends are there, but they are invested in the background. But because this is an international ETF, okay, it's not a South African ETF, the dividend withholding tax will be already taken out by those international companies. Okay, so by the time it's being reinvested into the fund, etc., the tax has already been taken care of. I don't have to worry about it, okay? And the second most advantageous thing about the TFSA is that there is no capital gains tax. What does this mean? See, I'm investing my daughter, she's a year old. She's probably not going to, I'm going to educate her, of course. She's probably not going to touch any of this money until she's very, very grown up. You know, maybe for her retirement, whatever. I'm not going to dictate, but I'd love her to invest long term and not touch. So you can imagine she's a year old right now. Let's calculate fast forward how much this money will be when she's now 40 years old or whatever it is. It'll be a lot of money, right? I mean, if I keep on investing for her every year, if I'm able to, she will have a lot of money, like in the millions, okay? And then by the time she sells, right, those millions, whatever her portfolio will be worth, all that money will be hers free of tax. Whether she's selling the international fund or the local fund, there is no capital gains tax in a tax-free savings account. That's the most advantageous use of a tax-free account. It's the capital gains tax. So if she makes $1 million profit, it's hers tax-free. Or if it's 5 million or whatever amount it will be at the time, it will be absolutely tax-free. So this is why I say I prefer tax-free savings accounts where you can actually invest your money in the market and not just leave it as cash, right? Because with cash, you're only getting interest and that's all. There's no capital gains. Whereas with your ETF investments, you get capital gains and you also earn dividends. So it's like a double, right? And if you reinvest your dividends, you are compounding your growth, right? That's where compound growth comes from. Okay, so guys, I think I've waffled enough. I'm going to stop the video here. Thank you for watching. Please comment below with all your questions, comments, and I will see you in the next video, hopefully soon. And I'm going to be more regular. I've been getting questions, oh Nozi, when are you coming back on our screens? I think, yeah, my daughter's old enough now for me to film independently. So thank you so much for your time, guys, and I will see you. Oh, please like, please subscribe, please share. You can see I'm a little bit rusty with this whole filming thing. Let me know if you enjoyed the video. If you did, please give me a thumbs up, guys. I will see you in the next one. Bye.